Good evening. Anything that we discuss today is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights using live streaming technology. So follow along as I navigate the markets by trading in my own account, and hopefully you will learn how I analyze the data in real time to make trading decisions. The purpose of making this video is to analyze Nifty options, open interest data. We would be analyzing Nifty spot on multiple time frames, and we would be framing a view for tomorrow, that is 11th February. And apart from the index, we would be discussing our stock watch list. So let's start by analyzing Nifty options, open interest data. So here you will see that for weekly expiry contract, 11th February contract, the max pin level has shifted lower to 15,050 levels. So if market was to expire tomorrow around 15,025 to 15,100 odd levels, near about 15,050 levels, then option writers are going to suffer the least amount of losses. If we analyze the overall open interest data, you will see that highest amount of calls have been written at 15,200 strike and 15,300 strike. And in terms of put, highest amount of puts have been written at 15,000 strike and 14,800 strike. So it gives us a broad range of 15,300 to 14,800 for this weekly expiry contract. And the max pin level is at 15,050. So market is currently pricing in an expiry around 15,050 odd levels based on the open interest data. And however, if you see what happened today intraday, through the change in open interest data, you will see that in terms of calls, highest amount of calls have been written at 15,100 strike. And you have to see that option writers at 15,100 strike are currently underwater right now. And if you see, highest amount of second strike at which highest amount of calls have been written is at 15,200 strike. And if we see the puts, you will see that highest amount of puts have been written at 14,900 strike, followed by 14,800 strike. And you will also see the puts in the money puts 15,200. They saw their open interest reduce today. If you would be seeing the price chart, which I would be showing you in a while, you will see that based on the price action and this open interest data for 15,200 strike put, we will see that option put buyers of 15,200 strike, they have booked their profits, and put writers at 15,200 strike, they have booked their losses. So in terms of tomorrow expiry, we have to remember that option writers at 15,100 strike are currently underwater. So it can be that their short covering can lead to a rally further. However, we would have to analyze price action based on tomorrow's opening. Now we are going to be analyzing Nifty on multiple time frames. So on the monthly time frame, Nifty is currently under control of buyers above 13,758 levels. And on the weekly time frame, here you will see that market is under control of buyers above the weekly open, which is at 15,064 levels. And if we see the daily time frame, here you will see the structure has changed from an uptrend. Earlier we were making higher highs, higher lows, and now for the first time in last couple of days we have made a lower high and a lower low. And in terms of tomorrow's expiry, if we trade above 15,168 levels, in that scenario we would basically be breaking structure. The structure would again be forming a higher high and potentially a higher low tomorrow if we trade above 15,168 levels. And in that scenario, we have to see that option writers who are currently underwater at 15,100 strike, they may come for short covering, and it can lead to a potentially higher move in the market towards fresh highs, potentially speaking. However, based on the daily time frame, we get the following scenario for tomorrow. Above 15,106, we can obviously trade towards 15,168, and above 15,168, There can potentially be short covering rally from 15,100 strike call writers who have shorted the market. They can take the market higher through the short covering towards 15,219 and potentially 15,024 levels. And on the flip side, below 15,011, market can trade towards 14,977, and below 14,977, we would we potential downtrend would be confirmed for us, because at that point of time we would definitely be confirming a lower high and a lower low structure in the market. But right now, we are not overly bearish in the market. And so I'll reiterate again, below 15,011 we can trade towards 14,977 levels. Below that, 14,926 levels, and potentially 14,861 levels. And the neutral price range for tomorrow is going to be 15,106 to 15,011. Now we would be discussing our stock watch list. Stocks for tomorrow are Tata Consumer Goods, IGL, NMDC, and Dabur. So these all stocks are inside candles on the daily time frame. So if we see Tata Consumer, we'll look for buying opportunity above 606 levels or selling opportunity below 597.2 levels, and we would not be making any trades in between the high-low range. Second stock is IGL. It's again an inside candle above 563.9. We'll look for buying opportunity, and below 549.9 we'll look for selling opportunity. And again, we'll not be making any trade in between the high-low range. Third stock is NMDC. It's again an inside candle, so we'll look for buying opportunity above 118.6 levels, or we'll look for selling opportunity below 115.65 levels. And a final stock is Dabur. We'll look for buying opportunity in Dabur above 528.95 levels or selling opportunity below 522.3 levels. So as you all know, inside candles, they are formed when there is an equilibrium between both the buyers and the sellers. So we would be looking to trade in the direction of breakout either side of the range. I would be summarizing. For tomorrow, above 15,106 levels, we can trade towards 15,168 levels, potentially 15,219 and 15,024 levels. And on the flip side, below 15,011 levels, we can trade towards 14,977, 14,926 and 14,861 levels. And broadly speaking, we're in a range of 15,300 to 14,800 based on the open interest data. And you also have to remember that at 15,100 strike, call writers, they are currently underwater. So tomorrow, if market starts trading above 15,168, this short covering will definitely be taking the market towards higher levels. And the max pain level for tomorrow is at 15,050. So max pain data, it just tells us potential expiry levels for the contract. So if market was to expire tomorrow around 15,050, then option writers are going to suffer the least amount of losses. And our stock watch lists are all inside candles on the daily time frame. The stocks are Dabur, IGL, NMDC, and Tata Consumer Products. So we'll look for an entry in these stocks if it breaks either side of the range, and will not be making any trades in between the high-low range. And finally, I would like to thank you all for watching this video. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. Thank you.